second session on unicorns, urban connectivity in turbulent times. We are living in uncertain times and in an equally uncertain economic climate. And the tech slowdown is pushing startups to get innovative when eyeing expansion, hitting unicorn status. Despite a drop in funding, reaching that coveted unicorn title doesn't have to be a lost cause. Unprecedented times and crises require exceptional measures and resilience and a culture that encourages thinking outside the box with a strong eye on climate change, diversity, and inclusion. Our panelists will share their views on how unicorns should adapt to the new normal, characterized by uncertainty and disruption, and adjust their policies and strategies accordingly. Let me introduce you our moderator, Kim Zidlow, Director, FDI Center. Our distinguished panelists today will include Walid Mansour, CEO, Middle East Venture Partners, Mohamed Salah, Oman Programs Manager at Brink, Karim El Sirafi, Managing Partner, Modus, Mansour Madavi, Partner at Blockchain Founders Fund and LP at Loyal VC and Draper Goren Holm Antec, Antec Kaluza, Creative Director, Enconverse and Vice President of Warsaw Startup Club, Walid Al-Bashir, Managing Partner, Intuitio Ventures LLC, Marianna Balbach, CEO and MP of Bizmoses Group, and Sean He, founder, Silicon Harbor Capital. So without further ado, let's get started and explore the challenges faced by unicorns in the tech industry and how they can adapt and innovate in these turbulent times. Kim, I leave you the floor.
Good morning, everybody, and welcome to our session, Unicorns, Urban Connectivity in Turbulent Times. My name is Dr. Kim Zidlow. I'm a director at FDI Center. We are a small boutique consulting company focusing on FDI attraction. So we work with startups, scale-ups, but also governments around the world to build sustainable ecosystems around the world. So this session has a couple of aspects that we want to touch upon, which dominate our economies nowadays and also the investment landscape. What does turbulent times mean? There are a lot of economic and political hiccups and turbulences around the world. In many parts of the world, we have strong inflation. Some countries go through recessions. We saw over the last couple of months strong layoffs in the tech industry, especially. All of that disrupted the investment landscape around the world, but nonetheless, today we want to speak about the implications. What does it actually mean for VCs and what does it mean for startups in urban setups? So, without further ado, I would like to hand over to our dear panelists and ask them to introduce themselves quickly, starting from the left-hand side with Walid.
So good afternoon. Thank you for having me here today in Abu Dhabi. Always a pleasure. My background has been mostly spent in investing in building tech companies. I'm the CEO, co-CEO of Middle East Venture Partners, which is a venture capital company based in the UAE covering the MENA region with focus on digital tech companies in the early and growth stage. We've been as a firm about 13, 14 years now in the Middle East, and I look forward to the conversation today.
Okay. Good morning, everyone. Thank you for having me. Thank you for arranging for the panel. My name is Mo Salah. I've spent my whole career in the ecosystem, serving startups. What a pleasure. And I think the topic of the panel today is very close to my heart. And I think there's a lot of startups and VCs can contribute to sustainability and to the future. So I look forward to the panel.
Good morning, everyone. Kareem El Sarafi. I'm the managing partner of Modus Capital. I am an Egyptian-American entrepreneur turned VC. Modus is a venture platform that specializes in venture building, where we partner with founders to help them build their companies. And looking forward to the discussion this morning with our panelists.
Hello. So my name is Mansoor. I'm a partner at Blockchain Founders Fund. So we invest in early stage, pre-seed, seed, blockchain crypto companies. We're headquartered in Singapore, but we invest globally. And then we work very hands-on with the founders that we invest in to help them with their relationships growing within the blockchain ecosystem.
Hi everyone, I'm Antony and I work at eConverse Foundation, and we are EdTech, HR Tech in Poland, and we are changing realities of entrepreneurial economy for Poles, Ukrainians, also for Czechs and Slovaks. Thank you.
Hi, my name is Walid Al-Bashir. I'm the managing partner of Intuitive Ventures. It's a venture firm with a venture builder based in Silicon Valley, Italy, and Dubai. And we've been in the market for 5 years. My background is in technology, particularly Industry 4 and Web3. Thank you.
Hello everyone, my name is Mariana Bulbuk and I'm the CEO and founder of Bismosis Group. We, over a decade, specialize in government affairs and commercial diplomacy in the Middle East, and we help capital ventures as well as startups and multinationals to obtain permits and approvals from the government authorities to operate, especially for innovative industries, and also assist with all to do commercial registration and permits in the region.
Good morning. My name is Shahi. I'm the founding partner of Silicon Harbor Capital, which is a private equity firm based in China. Prior to that career, I worked for the Carlyle Group and as well as the Aris Management, both based in the U.S. Silicon Harbor is an investment fund investing early in the growth technology in China, including semiconductors, robotic technologies, industrial software, and material, etc. So glad to be here. The reason I come to Middle East from China is because a lot of our portfolios, they do have a need to expand their business into this region, given their technology and the products is applicable in this market. Thank you.
Yeah, thank you all for the introductions. As you can see, we have fantastic panelists that not only come from different parts of the world, but also represent different actors of startup ecosystems. So we have VCs, we have startup builders, and also other actors here. So I'm looking forward to this discussion, and we'll start with the first question to Walid Al-Bashir. So what are the effects of global economic and political disruptions that we witness nowadays on the growth and innovation within the whole tech industry?
I think after COVID, there has been a need, for supporting or developing ventures that's providing basic needs, and this has made the interest in investing in Africa, for example, and other places which has like agri-tech capability or logistic capability. It became more important. And again, we see right now in Europe, for example, the effect of the war, the meltdown of the stock market in the US, and then we see a lot of movement in terms of the capital, identifying new territories, and we see right now the migration of millionaires, for example, towards UAE in the last year has been outstanding. So I think there are new players coming in the world in terms of ecosystems, where those ventures are looking forward. We see a lot of interest, as I said earlier, in Africa, in agri-tech, in logistic, and many other areas which formulate the basic need. We see also an emerging outlet for exit, whether it's been an IBO infrastructure in Saudi Arabia or in Dubai or in Abu Dhabi. I think over the next 3 or 4 years, those are going to be well recognized as diversifying the outlet for exit, at least for IBOs.
Okay, thank you. Let's also move to the challenges that these disruption bring along for startups. So I would ask Kareem, your fund is active in different places along the Middle East. So, in this climate, what are the biggest challenges that unicorns and scale-up face to maintain their growth and competitive edge?
Yeah, I think it's. I think first and foremost, right now, it's probably funding, right? We were just coming out of a very frothy market where lots of founders, access to capital was fairly easy. So I think that's one. I think that the second thing is that the businesses that were predominantly growing, not really focused on kind of like the core value proposition. I think they're now realigning a lot more. They're looking at the basic fundamentals like proper unit economics and really focusing on solving these problems. And I think that this was like a major shift. Lots of companies were being like hyper innovative, kind of spreading themselves a little bit too thin. And I think that now, they're kind of like tightening up quite a bit. So I think these two elements are you're seeing this quite a bit in I think generally in the MENA region. And then like Egypt, for example, Egypt is suffering from, a bit of, I would call it almost hyperinflation. It's not quite Lebanon, but pretty scary. So I think that just the global like economic, financial situation is really, it's really having an impact on different economies in different ways.
Let me ask specifically, do you see in your portfolio differences in terms of the challenges what startups face and also how they address these challenges between different countries? You mentioned Egypt, but is there, for instance, a difference between startups in Egypt and startups in the GCC in your portfolio?
Yeah, so every country kind of has its own dynamic, right? So Egypt is, I think, struggling quite a bit with having access to capital. I think a lot of investors are very risk averse and they're kind of like hands off. Even you're talking about governmental development organizations that would traditionally invest in countries like Egypt, even they are kind of like slowing down, putting the brakes on it. But the GCC is fairly cash rich, and right now, with the price of oil, they're reinvesting a lot of that capital. So I think, in the GCC, the companies are focused more on, it's getting, I don't want to say like, the capital is there, but they have to kind of change their narrative, right? A year ago, these companies were able to raise capital, again, without looking at their core fundamentals, unit economics, et cetera. But now investors are starting to ask the very, very hard questions because you've seen quite a few very, very notable companies kind of go belly up because they didn't have that focus. So, access to capital, I would say in Egypt, but the GCC, I think it's just a different dynamic. Investors are looking at companies very, very differently.
And
can
John,
I ask a follow-up to that? I'm curious to know your thoughts on this, but do you find that the startups that have launched previously are able to, adjust like their metrics to align with what the investors are looking for now? Or do you feel like new startups are coming along and going to market in different methods so that they have like good unit economics, good growth plans? How do you see that?
Yeah, that's a great question. I think it depends on the startup and the amount of funding it has, right? So if a startup is, if it's flush with cash and they have runway for the next, 24, 36 months, they definitely have the ability to pivot, refine, adjust, and kind of maintain their momentum. But companies that don't, what you're actually starting to see like an increase in acquisitions where there are these roll-ups. You have companies that somebody who has the ability, maybe somebody with a little bit more experience, even starting a new company, and they're essentially able to raise significant capital because of that experience that they have, and they're able to kind of go and cherry pick companies and put something together. So it is getting, there is a little bit of competitiveness there.
Interesting. And is that like a viable like exit opportunity to be acquired into these kind of roll-ups, or is it generally like lower acquisition price that people are buying up parts and then putting them together and making a bigger kind of enterprise?
Yeah, I mean, what you're seeing right now is really, it's really just distressed buyout. You know, this is more of what you're seeing. But I think generally, like for us as a venture builder, one of our exit strategies as part of our thesis is how do you get a liquidity event? You can build a company knowing that the aim is for you to build it, launch it, grab as much market share as possible because you're targeting a roll-up, right? And we've seen this and have actually participated in one company successfully in the past 3 years.
Fantastic. Mansoor, I would actually like to continue with you. So you have a strong experience in the blockchain space, but beyond that, what, in your opinion, what are the dominant global technology trends now, especially in the post-COVID era? Has anything changed? And what is your fund focusing on in terms of technology now and in the future?
Yeah, so we started investing in blockchain and crypto company startups in 2017. And so from our mandate perspective, we still continue to invest in blockchain and crypto startups. That being said, we have about 100 portfolio companies now, and we've kind of expanded to focus on every vertical in the space. So we got some companies that are more on the enterprise side, some that are doing kind of SaaS, so no crypto involved, others in supply chain, but then we got a lot of stuff in, the different verticals within the crypto space, like infrastructure, DeFi, NFTs, more institutional products. It is a mix of stuff across this space. But of course, if we look at broader trends like AI, obviously, I think we can't have a conversation in tech without talking about AI right now. And that's just taking the world by storm. And of course, like we've looked at investing in some companies that are kind of at the intersection of blockchain and AI as well.
That brings me to Walid Mansour. So you have tremendous experience in the industry, have been around here for many years. So would you agree with what Mansour said, or does your fund focus on, let's say, different technologies, or has even changed the investment thesis over the last couple of years?
No, of course, many things have changed over the past 3 years. In our business, you have to understand, our business follows cycles, economic cycles, but they also follow technology cycles. So every now and then there's a new trend that comes up, a new technology that enables new applications, and we come in when those applications become commercially viable to, of course, invest, scale, and sell. And our business is very focused on the tail end of the innovation cycle. So when you speak today about new trends and new topics and people getting excited about them, such as artificial intelligence, what we're effectively saying that there's a new flavor, we're starting to focus on it, and whatever we were doing 5, 7, 10, 15 years ago, in a sense, is not really considered high risk, high return anymore. So it's normal. We're not gonna go back in time and continue investing in stuff we looked at many years ago, because we're not gonna find the initial thrill and the initial upside that we look for. Now, what's the flavor of the day? There's a lot of stuff coming up. If you would want to focus only on the digital side, then you're dealing with information, artificial intelligence, you're dealing with technologies that are, we can spend a whole session on that. But there's also applications that are starting to come into more, I don't like to call them traditional, but more businesses that were not necessarily digitized, such as maybe construction or agriculture. So that's one side of the digital transformation. The other is really where your knowledge stops. I know people who invest in hardware, people invest in biotech, in genomics, in the sky's the limit. There is no angle. I personally talk about what I know most, which are the digital side of those innovations.
And so these turbulent times have put a lot of stress on startups and also your portfolios, I assume. So, Walid, can you share a little bit about your investment strategy and also your perspectives on, upcoming IPOs as exit strategies that a lot of scale-ups could pursue in the past and they were possible, but nowadays times have changed. And what's your perspective on that?
So sure, that's a very complex question, and it deals fundamentally with performance. And in private equity venture capital, our business fundamentally is an asset management business. We're financiers. We're not technology innovators. We can build, we can invest, we can scale, but we always come through the discussion from the financial side of it. We don't come to the discussion from the innovation side or the IP side. So our business is fundamentally built around creating returns, and those returns follow economic cycles, but particularly in the Middle East, and it's similar to a lot of markets around the world, they also are subject to an environment, whether it's a governmental environment, whether it's a financial environment, whether it's the dominance, prevalence of capital markets. So for instance, if our strategy would be to do trade sales, then that's great because we would go and build market share and already work on the exit by owning a vertical and see who's actually interested in buying that company from us. If we're focused on listings and IPOs, which by the way, we're probably, I've gone through 2 listings at MEVP, one in NASDAQ and one in AIM, and I'm constantly talking to regulators all over the region to do local listings. That's a complete different discussion because you need an equity story that retail investors and market makers would buy. And unfortunately, when it comes to startups and tech companies in particular, that story hasn't matured yet. Remember, our industry is small compared to what's going on out there. It's growing, but it's still small. Doesn't have the size of certain other more lucrative industries. So when it comes to IPOs, the strategy become how do you make a company much bigger, much faster than what it should look like. You start talking about profitability, and more you start talking about actually branding. You cannot list a company that retail investors won't know. Take the example of Saudi, which is the most liquid capital markets, and it's it's an amazing market. So specifically Tadawul and how Saudi retail investors adopt and trade. I think last year something like $5 trillion were just rotating on Tadawul. That's many times the GDP of the country. You need to tell them, you need to give them stories that they would adopt, that they would know. So branding becomes also an interesting, important in your element, in your equity story. If you're listing a B2B company that nobody knows about because it's very unique, it's not going to trade as the same way as a very successful app. And that has happened with Jahiz and with those IPOs. It's a very long conversation. I don't want to monopolize it, but the bottom line of it, we're still building the ecosystems of that exit velocity. We're doing it brick by brick. We are now at a point where we're very close to unleashing the potential of retail investors in MENA. Not there yet, but I can see it happening soon. So that's going to be a big game changer.
I would like to ask Jean to give us some perspective from China. So this was probably the more regional perspective on this topic, but in China is a completely different market. So does the Chinese market still have this liquidity and the appetite for listings and IPOs?
Right. in terms of the IPO liquidity, or just echo questions, because I'm around private equity in China, so there's a market. Can you hear me well? Yeah, the market is huge, right? So a lot of companies we invested, they was the target to IPO in domestic stock exchange, which is very good liquidity and very highly evaluated. For example, some of technology company we invested when IPO, the PE multiple is high as 100 times, even 200 times. It's not surprising, right? But compare other part of the market, the valuation is very high. But given the reason behind it, I think is a potential growth. Given the start, the technology, it just started. There's a lot of potential, growth potentials in China or outside of China. So as I earlier introduced, the reason I'm interested in this area because we see a lot of a demand for our portfolio companies, given their pretty mature technology, proven technology in China, very world competitive technology. So they have a need to expand their business globally. I think MENA is an excellent place, given the strategic locations in the market. So if you think about that, those early young technology company have world leader technology. In terms of valuation, has a lot of potential to go as well. So in terms of liquidity, it's pretty good. Obviously, we can choose other market to be public as well. Hong Kong Stock Exchange, NASDAQ, they all can be a choice. In the future, I think even Middle East Stock Exchange can be a good place for dual listing, for example, to increase the overall liquidity locally as well. So I think it's very different from here because I see I'm only Chinese here, and I see a lot of Chinese delegation here. I'm sure they would agree with me when go to terms of the liquidity. Investing hard tech in China is very popular right now. Compare a couple of years ago when people invest in TMT, consumer sectors. One of the big reasons is because the stock exchange really promoting those pipelines, your portfolios to be listed in the very attractive valuations. So I think this, to me, I think it's a good place to invest, to make money for our limited partners, and take our portfolio companies to thrive and grow outside of China as well.
So you already mentioned some aspects that concerns regulation in the market and the role of stock market exchange platforms and the regulator in general. So Walid Aboushir, question to you. Do we need different regulation, more regulation, less regulation to make it easier for startups to get to the listing stage and going for an IPO?
I think over my journey here, from 2000, being a software engineer and entrepreneur and right now venture builder and a VC, there have been a challenge with the talent pool in the region, particularly UAE and the Gulf countries, and particularly about the retention of the tech talent pool, because the region has been a sort of consumption rather than production area. And we see a lot of talents, they come over here, stay for like 5 years or 6 years, and they head to other destinations in Europe or other places. I think the announcement of the Golden Visa last year, a couple of years ago, and Digital Economy Program to recruit and retain 100,000 developers in UAE has a great impact into localizing talent and moving the country from a consumption to a production, sort of. Coming along with the Golden Visa, the disengagement between the employee contract and the ability to stay in the country, this has been a significant milestone. Because eventually, if you identify any specific talent and they had to leave their company, then they have like 1 month to look for another job or to leave the country. Now, this is not the case with the new regulation where they will have a 10-year golden visa and then they could move freely between a company and another. I think that has brought a very positive impact into attracting and retaining talent. And I think this is one of the major milestones. Walid Mansour has mentioned also regarding the regulatory requirement to list IBOs in the exchanges, whether it's in Tadawul or DFM or Nasdaq or Abu Dhabi Global Market. I think right now the lesson understood is looking at the unit economy and looking at profitability along with expansion and scaling will provide a greater chance for those startups or unicorns to fulfill the regulatory requirement, whether it's been profit or because we see now a lot of interest in a zebra type of startup rather than a unicorn type of a startup. So I think all these factors collectively will position the country here or the region in a good position for the future if it has been materialized, in an extensive way.
Can I just add something to that, if I may?
Oh, please.
Sorry. So Walid talked about, regulation from the talent pool, right? So let's call that kind of like the one end of the spectrum, and then listing, which is the complete opposite end of the spectrum. But I think regulation on the innovation side is like everything in the middle. Like, how are regulators creating an environment to actually foster innovation? I think this is something that is also very, very important. And I think that in the region, they're beginning to get the hang of it. But traditionally, the best way for a company to operate in a free market is for it to go out and run, and then the regulators should be observant with some limited level of control, right? But they should give enough room for these companies to really be able to flourish, because otherwise, if you regulate too hard, you're trying to stick a square peg in a round hole, and this significantly hinders innovation. So with that, I think that the region has been traditionally risk averse, right? And having very, very tight controls historically in the past, they don't want to wait for I don't want to say the A word, right? But the abrage to happen in order for regulations to kind of like come down and really tighten up. But, I think that they need to do a little bit more loosening up and continuing to create things like sandboxes and kind of like loosen the reins a little bit. And this is something that I'll kick over to Mariana because I know this is her specialty.
I want to put a different perspective here. Obviously, we see countries who are risk adverse, or because of lack of knowledge, they prefer to regulate it heavier, and that obviously puts away, increases costs, and startups are cost very conscious, and also makes it more difficult to attract investors and startups in specific industries that are heavily regulated. And then we have the other extreme where it's not regulated almost at all because we don't understand it, take your own risk. However, I am let's say, a promoter of regulations that are bringing substance and credibility. And personally working in the UAE and now being a part of the discussions and negotiations with the authorities in the public experiences that are put into the virtual assets industry. And we see ADGM that has publicly announced the law discussion, DIFC, which has applied specific rules and regulations for the first time in the world. Yes, they are heavier regulated than if we say Hong Kong market or even the US. However, every day we have consultations with fintech, meditech, and edutech companies that say we are already in Hong Kong, we are already in Germany, we are already in Switzerland. We want to be present in the UAE and meet those regulations in order to add substance and credibility to our business. So if we have shown that we could meet the highest requirements in the world, it means that we have that substance. And that also supports the IPO movement later. Consolidated substance is what's important. IPO can be good for a lot of money, but it could be too early to also break the deal. So it's very important to have not just multinational presence and expansion. Turbulent times need consolidation, but it also needs substance for you to be credible. So these regulations could be one way or another, but I promote and admire the UAE's approach into continuously. So they don't just create it once and leave it on the market. They continuously improve, develop, and stay open-minded in order to make them efficient, however, not simplest. in order for those regulations to be an added value to the businesses rather than a impediment.
No, great. So we talked a lot about the framework conditions, what turbulent times means, what implications it has on the sector. Let's zoom in a little bit more on the topic of urban and connectivity. So, dear audience, we still have a lot to cover here. So that would actually, bring me to Mo. So you're based in Oman, and as a company builder, you work with startups, let's say, on the other side of the spectrum where they're starting out. So what do you see in your work with startups? What are the biggest challenges in these turbulent times?
I think to be in line with my fellow panelists shared, I think firstly fundraising is harder than ever. I think April was the worst month on record in the last decade in fundraising in the Middle East. $7 million only raised in 1 month. I think we had a few months last year where startups in the region raised near $1 billion. So we're talking about 99% decline in funding. So fundraising is harder than ever. And I think it's not only happening because of startups are either good or bad. I think we have seen practices in the market that are quite very unsustainable. We have seen LPs and we have seen funds who invested on, I would say, valuation that are easily 100x inflated. And I understand the need and the urge to diversify economies. I understand the urge to catch up. But we cannot give a company $100 million, a seed stage company, $100 million funding at $500 million funding in the Middle East, because we're not in Silicon Valley. You're not coming up with a new invention. You're not OpenAI. Like OpenAI just raised at a $25 billion valuation. Like that's OpenAI. Like the company behind the solution that is literally looked at as a solution to transfer the world. So it doesn't make any sense for me, for any startup in the Middle East to raise today at $1 billion valuation. And I think Walid touched on IPOs, and I would love to see more IPOs because it's a reality check. When you go to the public market, you're no longer hiding anything. You basically, if you fire one of your employees, you have to disclose it. And so far, every startup in the Middle East that went public, we have seen its valuation decline by 90% at least. Whether the ones went globally or the ones went locally. And we haven't seen anyone went globally in the normal process. They all went through SPACs, and that's a model that it's really behind us as a world. And I can't remember the last successful SPAC in at least the last 5 years, not only in the Middle East, globally. So I think we have seen very unsustainable behaviors from both GBs and LBs, and that very much has stopped, I would say, and at least in the first quarter of this year and the last quarter. Also, we have seen startups revisiting their models and the way they're operating. And I work for an accelerator that have 11 companies. And one of the companies came to me yesterday and I was like, guys, it's okay to burn some money. And like, we're not gonna have, like the founders were like, we're not gonna lose $1. I was like, okay guys, that's too extreme versus the other too extreme. Like we went from startups wanting to burn hundreds of millions of dollars to they don't want to burn money at all because they know the investors and the market is looking very, very closely at that. The other thing I've seen and I really like, not only in the last couple of quarters, but I would say since COVID, the new industries investors are investing in. We're seeing a massive amount of money went into climate tech. I think the world is realizing that startups can help with that. We're seeing massive money going into biotech, food tech, agri-tech, all the areas where the world is feeling that there's a space for technology to transform it.
Which in most cases also have an impact then on future of urban life and sustainable cities. So, which is the actual topic, or one of the topics of our discussion today. So, just to follow up on that, sustainable city. What does it actually mean?
Personally or in general? Because personally, I think a sustainable city is a city where everyone feel they own it and they're represented in it, and they can express themselves. For a sustainable city, from a business point of view, is today in today's terms, I would say a city that is implementing ESG across all functions, from the way it's governed, to the way people are hired, to the way there's accountability. I think most of the sad stories we have seen in the ecosystem last year, and even this year, for example, Silicon Valley Bank collapse would have been completely avoidable if the measures on stress and running stress tests and regulation was not relaxed. Same goes for the lack of governance in the cases of FTX, for example. If you're a company that have $40 billion of people money, some sort of regulation and some sort of governance should be there, and investors and LPs need to step in, because these are private companies and it's very hard for the governments to regulate it.
Antek, I would like to come to you. So, as kind of the European representative here on this panel, I know that you're specialized in ed tech and HR tech, for instances, which are relevant topics that got a boost during COVID, but have never been as important as of today, and are vital parts of making cities more livable and bringing the talent that we need for the future. So what's your perspective on, for instance, technologies like ed tech and HR tech, and how they can contribute to sustainable urban development?
Yeah, thank you for the question. I mean, they can contribute greatly, because like what we are doing in Poland is like we develop entrepreneurial economy so that youngsters who do not have an access to new solutions, to AI, can develop further after they finish their studies or during their studies in companies. So I mean, if we bring innovation to the market, innovation that comes from the very, very young people that have an ideas, I mean, that can have an enormously great effect on the sustainability. And because for me, sustainability in the cities means like a clear vision that stands for no 4 or 5 years for just one cadency of an office, but for 10, 15, 30 years. And I mean, if we want to keep that, we have to develop our education that suits for the times. And I mean, that's very important. And I think that's also the case of Central Eastern Europe, which is like now developing really, really rapidly. And I mean, if we keep that track, that will result, I think in something really nice.
I think he's made a very important point, because this, in the past couple of years, the amount of funding available has significantly increased exponentially and kind of like off the charts compared to call it like the human capital development, right? So if you're a VC investor, right, and you want to invest in somebody who's been there and done that, how many founders in the ecosystem have gone from idea to exit, right? I mean, you're beginning to see the former Karims, the former, like the ex, unicorn founders coming and beginning to start additional companies, mentoring other entrepreneurs, etc. But it's not on par with the scale of the amount of funding that's really coming in. And if you look at the ecosystem developing, effectively like VCs and their LPs and other investors, they're paying for the learning curve for entrepreneurs in a less than optimal way, right? And this is kind of like for the venture builders here, this is kind of our thesis, right? Like take people who have been there and done that, and support these companies with this knowledge, invest more into the human capital.
So, Mariana, I want to ask you on that. So you've been based in the UAE for already far more than 10 years, and when we talk about the framework conditions that startups need in technologies that are relevant for urban development, but also beyond that, touching social, environmental issues, everything is about net zero nowadays. what have you seen that in the UAE that has changed over time, and where are we now?
Well, UAE has always had bold visions and bold announcements, but I personally find that in the last decade, or let's say 20 years, they have never under-delivered. And I think this is the first, let's say, point that proves that a country keeps to its word. COP28 is one of the examples where they bring not just the attention, but UAE has committed to showing results. However, not just in the UAE. So UAE authorities, by developing in the last 40 years an exceptional diplomatic power around the world and having a lot of humanitarian assistance given to the world, not just as a give, you know, the saying, don't give someone a potato, teach him how to grow himself. So that's the approach that UAE has taken in the last 40 years around the world. So when you can create as a small country, relatively small country, such a global impact, and then you create a hub and correct environment, correct rules, correct platforms, and exposure and credibility around the world, you haven't just worked inwards, which majority of countries do. Still, till date, they focus on inwards problems, inwards solutions, inwards systems. Connectivity is on a micro, but also on a global stage needed. So results in sustainability will never work at the local level. Results in change, sustainable change in legislation, in collaboration between private and public sector, in capital ventures and startups. All this sustainability talk has to deliver only if it has a global impact and global reaction. And I am humbled and proud that UAE has become my home over a decade, and I'm leaving this journey of change from an inwards thinking to a global impact approach, as well as from setting up high goals, which a lot of startups and unicorn companies do, and actually setting onto being accountable, which Mohammed was referring to, and delivering on those goals or over-delivering based on the UAE's example. We have to be mobile, we have to be flexible, but not volatile. And this is what's very important when we speak about turbulent times. Being flexible doesn't mean distribute your attentions to too many things and overpromise, but means consolidate and be easy to move. Multinationals have learned this during COVID. There have been these big heavy machines that had to be moving fast and quick and adapt. And SMEs have always been adaptable, but had volatility. So I think the last 5 years has been a great learning for everybody on a global level, and who has gone with the trend and tried to be innovative rather than spread out too much. I think it's proving to be a great example globally.
So you already mentioned a couple of important stakeholders in an ecosystem that are important for having the right level of connectivity that startups need, independent of turbulent times. But during the times that we just went through, the right level of connectivity can actually be a solution, can actually be, or can create the resilience in the ecosystem.
Indeed.
So, can you elaborate a bit more on that? What makes the UAE such a strong ecosystem?
Well, first of all, working with diplomatic missions around the world, the biggest tendency that we see that affects the connectivity is this taboo idea that private sector should do private and public sector should be public, and they should only consult each other, which I find wrong in its foundation. Public sector has the capacity of impact, while private sector has the capacity of funding, expertise, and execution. So UAE has set an example, and I think regionally now this has been picked up in Saudi Arabia, Bahrain, Kuwait, Qatar. They're setting this example where they are not enemies and they're not allies, but they are partners. So partnership between public and private sector is utmost needed. It's mandatory and it had to happen 100 years back. So implementing funding, expertise, execution, accountability between both parallels is literally the key to success, and creates not just money, but then no infrastructure for startups, or infrastructure but no money for the startups. It approaches on a global angle the needs of the business and the investors for security of investment.
I think if I may add here, some points here. I think some of the lesson learned from COVID and all the changes in consumer behavior over the last 4 years is that we could do a lot with a lot more with less. You know, so looking at looking at ventures like Zoom, for example, and how it has contributed to the future of work. And I believe, me personally, I am commuting less, much less than I used to commute before 2019. You know, so such such ventures will bring a great impact on the way we work on making us move less and eventually generating less carbon credit. We look at transport and mobility, at urban connectivity today, and looking at mega projects like, for example, in Saudi, NEOM, where you could mostly commute like 500 meters or 1 kilometer to get all your needs. I think this is the future in which you get to do everything without emitting a lot of carbon dioxide, and then getting, you know, to sort out the transport, the mobility. Future cities will have more parkings. We see a lot of ventures now coming into personal mobility, for example, in which the emission is less. So I see there is a lot of positive, like lesson learned from this turbulent time over the last couple of years, in terms of venture building, in terms of venture contribution toward ESG. You know.
Can I
Mo,
comment?
do you have a comment?
I think a huge part of the conversation about commuting less and working from home and all of that, I think we neglect a lot the well-being part of that. I think no one can deny that we had more time to spend with our families, more time to cook, more time to exercise. Because on average, you commute like 2 hours a day. That's such a waste. And every city in the world is complaining about traffic. Let's end it. We're complaining about traffic. We're complaining about the impact of traffic on climate. And I think if we manage to run the world for almost 2 years without being in office, I think we can just continue doing that. For the sake of our mental health and for our well-being, basically.
Yeah, I'd like to comment some of the conversation I listened to my panelists about innovation but innovation to rely on ecosystems, right? That's why Silicon Valley is so successful, because they have universities, innovative technologists, and as well as market. And China becoming an innovation center as well in the last 5-10 years. They rely on a lot of the innovative technologies created around the world, but China represents the biggest market at all. So every year I went to California, I met my friends, classmates, friends in the US. A lot of interesting technology innovated and thrive in China because of a big market. That's why China has more than 25% of unicorn in the world. So it's a cross-border effort, I would say. Obviously today is a challenging time, given some of the decoupling is happening, right? But as investors, I'm thinking we're serving a bridge. We should work together. So that's why I've come here. I mean, I think Middle East and China has a lot of cooperation opportunities. And Middle East is a capital surplus countries. Very rich, to be honest, right? So you are the biggest LP for a lot of large companies I worked for before, Carlyle Group, KKR, Blackstone, etc., right? But when China, you should invest it. GPs in China, for example, are investing world-class technology companies which are willing to expand business in this region. So be very helpful if you want to create a tech hub, for example, right? You rely on a really innovative, technologists in the market application as well. And for VC investors, you want to reduce the mistake. So you can look at proven technologies and different applications, for examples. So I think, that's just the way what it is. It's not a small circle we do just by ourselves. You create a small circle. They will never thrive and never be competitive globally, I would say. So, I admire the ambition here. Before I came here, I see real estate development, hotels, tourism. But I'm very surprised last year when I came here for GTAX. I see people very interested in developing technology, renewable energies, EV cars even, without a lot of infrastructures. Where's your charging posts, for example? A company we invested, we tried to find a solution here, chassis or autonomous driving, chatbot, so they can carry batteries to moving to where the EV car needed. So even without the infrastructure, you can develop an EV market. So that's one thing. It should be really the world should be work together, and China and Middle East should work together to benefit each other, right? Capital should work together to benefit each other.
Yeah, strong message.
Very honest, but
The first association.
No, very good. So, one of the terms we're talking about is connectivity. We talked about stakeholders and an ecosystem, and the ecosystem in the UAE has a certain structure. You mentioned Silicon Valley before, but let me follow, with a question for you, Sean. In the Bay Area in China, in the Shenzhen area, why do so many unicorns come from that area? What's special about the ecosystem over there? What can we learn from that?
Yeah, so we talk about the connectivity, right? Just to echo this topic. I've been living in China long enough, I just forgot when I come here. The first thing I have to look at ATM to get cash and a credit card. I almost forgot I have a credit card in China. I don't use credit card, I don't use cash in China. Everything operated through mobile phones. In certain airport, you don't need to check in. You scan your face, facial recognition technology allow you board without everything. So connectivity is a system that will achieve your goal without human interference. They achieve more intelligently, more efficiently. So a couple of months ago, I visited a friend's factory. They're making furnace at very traditional stacking, factories. I was so surprised. There's no man working on there. It's dark factory. There's no lights even. Everything is manufacturing automatically, intelligently without people. Your thousands of parts delivered from warehouse without people, and assembly without people, and then packaging without people. So it's a very, very traditional factory, can achieve like that. So this is what connectivity means. So it's a system. Basically, you require to build infrastructure, 5G network, for example, 6G networks even. You need to invest without profit in initial years. So that's actually where the government coming out. They invest in infrastructures, invest in very remote areas where there's no economic value, but it's important components of the building a connectivity. So I think that's where I come from, and when I go to everywhere in the world, I compare this. I do believe China, in certain areas, is pretty advanced in terms of the connectivities. I think they run out of technology. That's why I think Middle East can be a very good market to work with Chinese companies like Huawei, for example, right? They provide 5G network at very economical cost, right? And regardless, world geopolitical issues, I do think, that's the way we should go as investors. I strongly promote my portfolio companies to bring technology here. For example, we invest company to make reverse osmosis membranes. That's very compatible to Dow chemicals. They're providing technology, products. It's much lower cost, but superior quality as Dow chemicals. So why not here, right? For seawater desalinations, right? For industrial usage. Those are, I think, it's a technology infrastructure which is needed to build a hub or innovative place here in Middle East.
Physical infrastructure is important for a city. People having the right environments to live a thriving life, sustainable environments where people are happy, where they can live a fulfilled life are important. Learning is important. Schools, the whole infrastructure, health, yes. We talked about mobility, how people move from one place to another. We talked about the industrial space that's part of it. But Mansoor, so what about blockchain? So how does blockchain affect our lives now and in the future?
So I feel like that was just thrown in to give me a question, just to relate the topics. But I think blockchain has a lot of applications. Like even as an example, right, as the world moves to more and more AI, like methodology for auditing the AI and the underlying information that's going into it and the outputs, right? There needs to be a way to, monitor how they adapt, right? That's just one example. I think anytime we're looking at requiring immutable data, especially when it has to be multi-party, there's a use case. In the blockchain industry, we like to say blockchain will solve everything. I don't think that's true. I don't think it is true. But I think there's specific use cases where it makes sense. Solving like the counterfeit, like the authenticity of items as an example. Supply chain. I lived a few years in China as well, and when you buy products from JD, one of the largest e-commerce sites, even meat, you can scan the QR code and it's all on blockchain, and you can see the history of the cow, for example, what farm it came from, who the owner was, who the veterinarian was, what medicines it's taken, and the whole essentially history of that animal that you're eating, right? And so this is like some of the areas where it can be implemented when we look in cities of the future.
So especially with these emerging technologies, then again we are very quickly back to regulation. We haven't even started talking about artificial intelligence. I mean, for a reason. Otherwise, we would sit here probably the whole day, talk about it. But nonetheless, maybe Walid, can you quickly touch upon, let's say, the constraints of new technologies? Because in the end, they can be applied in so many different ways. We haven't even considered or talked about ethical considerations in AI. But what role should regulators play, or let's say, to what degree should they be involved?
Sure. I mean, the topic of AI is timely, interesting, and multifaceted. We've been investing in AI applications for about a decade now. We just call them today AI. We used to call them something else. And at the core of what we do is basically data ownership. So whoever gets the data ownership right and is able to mine it properly, build the right applications wins. And this is fundamentally a commercial activity. It's not really a regulatory activity, right? Because unless you're dealing with some sensitive military data or what have you, most of the data out there are related to sectors that are commercially driven, and therefore their applications, smart applications, or even AI applications do not necessarily require much regulation if they are available. What they could require is more probably collaboration. So if you're looking at simple stuff, things around mega trends on real estate, education, healthcare, it's going to be very difficult to get some of this data cleaned up, released, so that others work on them and startups start generating them. And they're not enough also data sets prepared and clean. And I'm talking about our markets here to do this. The other half is that you have a lot of private companies, digital companies, who are sitting on a wealth of data, and those are typically big startups, and we've invested in many. That are starting to come up with very interesting, commercial applications on top of it. So I don't see a big role in the regulator on that part. Now, I think the topic that is mostly a media topic today, and it's a global topic, has to do with job safety, has to do with big tech coming into markets, kind of disturbing your market equilibriums. Those require certain protection. So I don't see why certain countries, protect their borders effectively, especially big countries, and they don't allow smaller countries to do the same. This is also, that becomes a sovereignty issue, and we live in sovereign countries here. From the talent perspective, I think the talent war is becoming more and more intensified. A good thing is that the UAE is attracting amazing talent more and more. This country is becoming home to a lot of innovators, entrepreneurs. I have tons of friends who moved from Hong Kong to come here. Tons of friends who moved from Singapore to come here. So that's just talking just about the last year alone. So there is a clustering that's happening that I find interesting. Things like golden visas were also, I think 100,000 were issued on only the past 18 months. Many billionaires moved here, etc. So the talent clustering part in the UAE, I see it working, and I see it will become much more interesting. Again, I left France in 2004. I came here, so I've seen a lot of evolution on where the UAE is going. And talent is at the core of every discussion I have with ministers or director generals or sovereign funds. And talent is directly correlated to artificial intelligence applications. Now the technology part is just really, to a certain extent, becoming more and more commoditized. Right? There's a lot of commoditization in AI that's happening very fast. So you don't need, to worry a lot of it. There are few providers even there. There are a few excellence centers here and there. They're based on open business models that you can rely on. And you don't need to replicate the Silicon Valley here. I heard somebody talk about Silicon Valley before. People forget that 15 years ago, Silicon Valley was a village. And the reason it became what it is today has fundamentally related to the availability of cheap money in the US. People forget that. Now we're getting back into the area of expensive money. So, to close the note on that front, I believe the regulator will have to play a role more in the talent war and attraction of talent war and attraction of more capital here, than rather really worry about data protection, AI application, and even job safety. I'm personally not worried about job safety because I can see the reskilling. We're living in a world, this post-COVID era world, where everyone is expected to have multiple careers. We're expected to change jobs. We're expected to, so we have to train ourselves to kind of embrace the new opportunities that come up out of it. And 90% of the population in the UAE in particular is expat, which means we're all workers here. We're working bees. So, it should be in our DNA to adapt, come up with ideas, come up with stories. I think the UAE will continue becoming the center of the Middle East, the economic center of the Middle East, the hub. I would think specifically Abu Dhabi, Dubai are on the rise. If you give them 10 years at the same projection, you'll see them, they're already almost there. They'll see them world class. They will attract the European, the American, the South American, the African, the Arabs. They would come here. They would not go somewhere where they're not necessarily welcomed, or they're not necessarily understand the language or the culture. What was built in the UAE as a human experiment has never been done in human history. So that's amazing. If you continue focusing on that, I think we'll be good.
All right, so we're coming slowly to the end of this session. Before I ask the panelists for their final remarks, are there any questions from the audience? We can take one quick question. Yeah, please. Please. Do we have a microphone? over there. One of the refreshing things why I'm here, one of the reasons is, I'm from Germany. One of the biggest topics is data protection, data sovereignty. So hearing some other perspectives is really refreshing. Over to you, please.
Hello, good morning, everyone. Thank you very much. It was a very attractive session because the session is talking about unicorn. So I wonder from by now, the panelists here, 7, 8 panelists here, who of you is unicorn? Number 1, number 2,
sure.
Number 3, and what is unicorn definition?
It's a company valued at $1 billion.
Because unicorn definition has a more or less international standard by value, right?
Yeah. Yes.
So I understand that you meet the international standard. Okay. So in fact, my expectation on the session today is not in the way today to talk so long. I want the people, you are there, here, many people here, and to have engagement. So that was the reason I came here. I want to see if any unicorn have a pitching to show your strengths and how you develop, and other capitals, funds run after you to show the process. But that's what we want to see. And many companies here, they want to learn from you. That is one more attractive. Thank you.
So, thank you for that. Let me answer.
I think you're in the wrong room, my friend.
Yeah, this is more about investors.
Let me answer.
Yes, sir. I think.
Please give me a chair if you understand me.
Thank you, sir. Thank you for your interest. But I think really this is the different session. Nonetheless, that brings me to our panelists again. So we have last few minutes here, and I would ask you for quick final remarks. And we start over there on the right-hand side, and then we go one by one all the way down to the Valito here. Sean, please.
Okay. It's interesting to see some audience mentioning that they want to learn and from unicorns here. I think, when I've been investing companies for more than 25 years, obviously I invest in a lot of unicorns as well. But most successful unicorns, I think that they have a very ambitious, not only for the local market, but global market as well. Become not only technologically competitive locally, but competitive globally. So that's very important, how to cross-border expansion of the companies. That's why I always encourage our portfolio companies to go abroad. And as an investment criteria, I favor those companies with more international background, has potential to grow into an international giant.
Thank you.
So that's what I learned over the last 25 years.
Thank you. Mariana.
Well, turbulent times, in my perspective, is actually not a deterrent to growth, but it's actually a creation of opportunities. And not knowing a new market nowadays is not an excuse. We're no longer with pigeon post. I mean, we have access to information. So if you don't know how, then take the right talent on board and the right expertise. The biggest mistake I see that the startups do is they keep focusing 90% of their energy in finding money, but they do not focus enough in finding the right people to handle those money and to bring credibility behind the stories as they bring. So turbulent times is not the problem. The approach to how you build your credibility, as Walid was saying, and how you build that story behind to have substance, then come to the right approach and the right investors for the money. Not any investor is the right investor for your venture. So it is very important to create that ladder of actions and go one step at a time, not too long. So aim,
Yes.
but create substance and actions.
Thank you.
I think we have been through a sequence of turbulent time, right from COVID-19, then the crypto winter, then the stock exchange, downfall, and recently the American bank sort of, crisis. I think some of the lessons learned from from this very unprecedented time is that VC is beyond the valley today. So we see a lot of emerging managers, we see a lot of VC funds. So even some of the largest firms in the valley, they have decided to go virtual, and then they're not really based on the valley anymore. So we see a lot of VCs in Africa, in Central Asia, and all, which is a good thing. And the second part is we see a lot of interest in sustainability.
Thank you.
I think that's the two key points, we can take forward.
Antek.
Yeah, so it's really interesting what Marianne said about that approach that matters, not the turbulent times. So I think especially when it comes to education and AI, and what you said, like the regulations are not the most important. I think when it comes to AI, the guidance is important because young people do not have guidance, nor from business, nor from governments, how to approach this and how to use it as a really, really important and effective tool. So I think that was the most important. Thank you.
Great. Mansoor.
So for my closing remarks, first of all, I'd like to thank you all for being here. And it was wonderful, being on the panel with such esteemed guests. For me, the things I'd like to say, and it was an interesting conversation talking about regulation, the intersection of technology. The one comment I want to make is, I think the opportunity for growth, we're kind of at that time where we're starting to see a lot more of them. And Walid, Mohammed, you guys touched on, the macro environment. I think with like some of the layoffs that we've seen from the big tech companies, Google, Facebook, so forth, that a lot of accomplished people are starting new projects, new endeavors, and coming from the venture space, we're starting to see more and more accomplished founders starting new projects, and these are the kind of things that we're seeing opportunities to invest in now. And being at the bottom or near the bottom or whatever of the cycle, I can see very clearly that in my mind there's light at the end of the tunnel with tremendous opportunity for growth coming out of this.
Thank you. Karim.
Yeah, two quick points for closing remarks. One, turbulent times, and especially when you talk about unicorns become successful because the founders are ruthlessly focused on value creation and value engineering, not on financial engineering. Leave financial engineering to the investment bankers. That's their job, right? To all the investment bankers in the room, I apologize. And this is why the most successful VCs in the world are founded by former entrepreneurs, because they understand and they can relate to the value creation. So continuously focus on value creation and engineering value, and you'll be able to weather the storm. The other thing is, second point is, get comfortable being uncomfortable, because these cycles continuously happen. And all you can do is control how you react to it. You can't control the environment. So just get comfortable being on the edge and being uncomfortable, and that'll definitely help.
Awesome. Mo.
2 points. Turbulence time were never an issue for builders. I think most of the unicorns we have seen in the last decade came out of the 2008 crisis. That includes for sure Stripe, Airbnb, Uber, everyone where we very much look up to right now. This turbulence we're having right now came with AI, and I think it's a massive growth opportunity. Regulators have to stay away. We're on day 0 or not even on day 1. Them jumping right now is gonna hurt that growth. I was very lucky 2 weeks ago to sit and listen to Sam Altman, the CEO of OpenAI in California, and he said machines never replaced us, and we historically were able to create more jobs out of any technology we built than the jobs we've lost because of building that technology. I think if we look at the farming industry today, we definitely have less people there, but we definitely have way more people there, and I think the technology in other areas, and I think the technology industry specifically have always delivered on the promise of creating more jobs than the jobs lost because of the creation of technology itself.
Thank you. Walid.
Well, first of all, thank you for the opportunity to speak today. It's been a wonderful session, and I'm honored to be with you today. I see a lot of people have traveled from all over the world. The UAE and the region is really an exciting place to invest, build, and live in. If you're serious about being here, being part of the fabric of investors, entrepreneurs, or participants, I would encourage you to do so, to move here, to build something meaningful, and please do reach out if you need anything. Thank you.
Thank you. So, dear audience, thanks a lot for being here. If you wanted to be here or not, this was your chance to learn, important insights from, top star VCs from around the world. And thanks a lot for being with us, dear panelists. It's been a pleasure.
Thank you, Kim.
And, one round of applause for this amazing panel, please.